Monday, everybody. Your man Omid here with you once again to tell you what's going on in the market so you can become smarter than your competitor. So here we go. Bond market, very, very tight trading range, as you can see about what's happening here on today's chart, right? This is for the past, what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, about 2 weeks of trading. Very, very tight in this range over here. Rates are not going to move when it's this closely traded. The good news here is, if there is any, we are operating in a stochastically negative environment, meaning that the bond traders should be coming back in because the bonds have now been oversold. So hoping that they come back in. Haven't seen many of that, but again, this is why you hire nerds like me to be able to understand the market and advise you as a buyer or your clients as a realtor of what the options are for locking and floating once you get under contract. So this is important stuff. Speaking of rates, last week 7.43 nationally. Today 7.43 nationally. Isn't that funny? So it's trading very much so in a tight range within a 1 basis point of one another, according to Mortgage News Daily, who is our aggregator friends that collects all the information nationwide and puts it up for us. That website is available to you, and you can definitely follow the trends yourself if you would like. The other trend that you can also follow is the 10-year Treasury. So depending on how the Treasury swings up and down, that's usually what mortgage rates roughly follow as well. Okay, what's happening this week that could be a market shaker? Nothing today. Case-Shiller Home Price Index plus the FHFA Price Index are going to be coming out. Now, the Case-Shiller embodies all homes sold in the United States regardless of price and gets the median of that and spits that out. FHFA does that specifically for homes that have conventional mortgages behind them, right? So that's coming out tomorrow, and they'll show us exactly what's happening with pricing. ADP employment report, probably the one that I read the most, I watch the most. ADP manages over 250 million payrolls in the United States. They know what they're talking about. We feel like that's the accurate report nowadays. Plus, the Fed Reserve comes out with their press conference and their statement. I don't think we're going to see anything that says they're going to lower the Fed funds rate anytime soon. As a matter of fact, I will stick by what I've been saying for the past 3.5 months in that we'll be lucky if we see one Fed rate cut this year, and I bet you it's going to be closer to that November election timeline. So we'll see how that goes. Initial jobless claims, again, last week they came out. For the past 4 weeks, you guys, they've come out right at 212,000 jobs, right? 160 million people working every week is 212,000 jobs. So this one was 206,000. Okay, 6,000 apart, but that doesn't make any sense. Again, I feel like there's something going on here. And the BLS report, the L is tiny there for a reason. That's the Bureau of Labor Statistics, comes out with their jobs report showing us how many new jobs were created. They keep futzing around with this number, you guys. They keep showing that they showed 363,000 new jobs. Wall Street rallies and takes off of the fact that the economy is strong. And then what happens the next week? They do a revision where they knock down 100, 200,000 jobs off of that. So this is the problem, and this is why inflation continues to be as sticky as it is. Now, quick pause here. If you find the information that I'm providing to you valuable, please do me a favor. Like and share this with one other person. We're trying to grow this channel. I think the educational aspect of what it is that we bring to the table is really important. So please like and consider sharing this with at least one other person to help the channel grow. I would really appreciate it. Okay. So speaking of inflation, right now we are stuck in a place where I fear that we're right around the corner for stagflation. Now, what is stagflation? Stagflation occurs when inflation continues to go up and economic growth slows down, which is exactly what's happened here as of last week. The PCE, which is the personal consumption expenditure, rose by 0.3%. So inflation hotter than expected on a month-over-month basis. Not good. Why is that happening? Because we keep spending money. Everywhere you go, every restaurant is booked up. People are still buying expensive items, cars, watches, boats, etc., etc. Yeah, and that is happening because of the fact that we keep showing stronger than expected employment reports, which then pushes Wall Street up, which then people's stock portfolio grows and they feel like they can go out and spend money. Right? This is a giant chicken and the egg thing, and I hope to God that it stops soon. Now, on that, Here's factual data. The gross domestic product, so the complete economic output of our economy, was down as expected. It was only at 1.6. Expectation was at 2.5. It's actually a lot lower than it was in Q4 of last year, right? And so it does show that the economy is slowing down. Stagflation typically has three legs to it: higher than expected inflation, check; lower than expected growth, economic growth, check; and the last piece, higher than expected unemployment. So that's the one thing that I want you to keep an eye on. The minute that that unemployment starts to show that, or show truly and correctly as far as what it is, we're going to start to see this environment slow itself down. Now, what does this all mean for real estate and for rates? Look, it's the same message. Nothing has changed. Rates are where they are, and that's okay, because of the fact that there's ways to affect those rates and make it affordable for the consumer. And really, at the end of the day, my message to all of our buyers is, if you can buy a house, if you feel like this is the right time for you, don't you wait. Because by waiting, all you're doing is giving up that higher interest rate that goes, let's say, from 7.5 to 6.5 on an $800,000 deal. You're going to save yourself, I don't know, $250 a month. Yay. But during that same time of a year that you're going to wait, the minute that those rates hit 6.5, what's going to happen? Everybody's going to come into the marketplace. All the sellers are going to increase their sales price. There's going to be climbing over each other in combat, mortal combat, once again, to buy a house. And that's going to do nothing but increase the price of the house, right? 50, 60, 70, 80 grand. So great, we waited a year, we saved ourselves $2,500 in overpayment, but now we're paying 50 grand higher for a house. It makes no sense. So again, if you found this information useful, please like and share with at least one person. This is the only way that we're going to cancel out all the media and all the bad press that's out there, all the bad advice of folks that's out there right now. I heard one of these talking heads out there talking about the fact that, oh yeah, people should continue to rent instead of buy, even if they can, because of the interest rates. It's asinine. Let's teach people the right way. So share this with at least one person. Let's get that education up and be able to move ourselves from point A to point B. Housing is still very much so a pillar of being financially healthy, raising your family there, having a future nest egg, and having a tax deduction. None of those things have gone away regardless of what the interest rates are, okay? Have a fantastic week, and chat with you soon.